Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be doing a brief stock analysis on Air Products and Chemical stock, ticker symbol APD. This one is one I do own in my dividend portfolio, and the price, along with a lot of the stock market, has really been going down over the past few months since the beginning of the year, and I see it as a great buying opportunity for this company that I think is going to do great over the long term. So we're just going to look at a little bit of information from their most recent earnings reports, look at the balance sheet, look at some information about the dividends, and we're going to look at some valuation information as well, just to give us an idea of how the company is doing and what kind of stock price I'm looking to be buying this company at over the long term. So like I said, first we're going to look at some of the earnings information from their fiscal year fiscal year 2022 Q1 earnings report, which was released on February 4th, 2022, as we can see. So the fiscal year for them starts on October 1st. So the fiscal year 2022 Q1 is from October 1st to December 31st of 2021. So they reported their results here of GAAP EPS of $2.52, which is up 19% over the prior year, and GAAP net income of $550 million, which is up 13% over the prior year. And they also announced sales here for the first quarter of $3 billion, which is up about 26% over the prior year. It is important to note that that's not all like volume-based sales. So 14% of that increase was from higher energy costs. 8% of that was from higher volumes. So they had about 8% more volume of sales. And then they had about 5% of that increase was from higher pricing. So it's important to note, all of that isn't completely in their control. Some of it's because of, other factors down the line, sort of down the supply chain, I would say. But that's still a pretty fantastic increase for revenues or sales in the first quarter. They talk about the business segments here. So Americas, Asia, and Europe are the main segments, with about $1.2 billion of sales in the Americas and around $750 million of sales in Asia and Europe. And they've sort of been getting into the Middle East and India recently, which I'm not really going to talk about that much in this video, but that is something to be watching, I think, over the next few years to see how that goes. And then they talked about their outlook here with they expect full year 2022 adjusted EPS of $10.20 to $10.40, which that would be about a 13 to 15% increase over the prior year. So 2021 EPS. And then just for the second quarter 2022 alone, they are looking at $2.30 to $2.40, which would again be in that 11 to 15% range of increase. So that's pretty awesome that they're looking for double-digit increases in earnings this coming year, which, as we'll look at, we haven't really seen that level of increase in earnings over the past few years. But we are hopefully going to see that this coming year. And this is kind of just an income statement. So again, sales around $3 billion this year in the first quarter compared to around $2.4 billion last year. Then net income down here of around $560 million this year compared to $482 million last year in the first quarter. And the other thing I wanted to take a look at here was the balance sheet. Current assets right now of around $6.5 billion, which is down fairly substantially from around 8.4, so around $2 billion decrease from the beginning of first quarter to the end of this first quarter was around a $2 billion decrease. And we can see the main reason for that here is in their cash balance here, which decreased from around $4.5 billion to $3 billion, which is something I've kind of noticed is over the past year or two, companies have increased their cash position just because of the uncertainty going along with many of the issues following the pandemic. But over the past few months, some companies have been really decreasing that cash position some as they have figured out what really is going on and how much cash they really need. They've decreased that, but we can compare it to current liabilities. Their current liabilities are only $2.6 billion, which is way less than their current assets and less even than their total cash. So they could really pay off all those current liabilities that they owe within the next year just with their cash position, which is super awesome to see. And then looking at total assets, around $27 billion, which is more than double their total liabilities of around $12.7 billion, which is again a pretty positive sign, I would say. And looking at their dividends, their current dividend yield is right around 2.8% with a payout ratio of around 64%, which is pretty solid. Definitely lots of room to increase that dividend, which they have a long track record of doing. Over the past 39 years, they've been growing the dividend every single year. I'm sure not every single year has been in the double digits, but over the past 5 years, they've had an average dividend growth of around 12.6%, which is something as a dividend investor, that really excites me for the long term, because, lots of these companies I'm looking to invest in for 10, 20, 30 years. And so I want them to be continually increasing that dividend in the, 8 to 12% range. Ideally for my overall portfolio, I'd say my goal is in the 7 to 9% range, probably around 8%. And 8% is exactly the amount that they increased their dividend just a few months ago. They announced that, and that higher dividend will be paid out in May 9th, as of record April 1st, which the ex-dividend is March 31st. So that increased dividend will be paid out in May, which I'm super excited about. And looking a little bit at the PE ratio, we can see right now their PE ratio is 23.7, which is definitely a little bit higher than it has been over the past 10 or 15 years on average, I would say. But we can see the earnings haven't really been growing that quickly, I would say, over the past few years. But with these increases that they are expecting, I think over the next year, I think their earnings could grow a little bit more quickly over the next few years, which could obviously be a good thing for us as shareholders, and would make their PE ratio likely look a little bit more attractive to investors. And comparing their PE ratio to the overall basic materials sector, we can see the average for the sector is around 16, while the average for the chemicals industry, which APD is a part of, is around 19. So APD definitely a little bit higher than their sector and industry, but that's okay, because they are kind of one of the highest quality companies in this sector, I would say. And so a little bit higher of a PE ratio sort of makes sense, because investors are willing to pay a little bit more for the high quality nature of the business and the company. So we're also going to take a look a little bit here at a stock chart, and we can see this is basically over the past 2 years. So 2 years ago was basically the bottom of the March 2020 crash. So we can see they have a low of around $173, and right now they're trading around $231, which is significantly lower than they've really been trading over the past year. So I think if we look at the past year, it's a really interesting chart, because we can see they've really been trading in a pretty fairly narrow range, kind of in this 280 to maybe 310 range, pretty consistently. Obviously they were above that and below that at some point, but generally speaking, they've been in that range. And now over the past few months, we've seen them really drop below that range, and they actually had a gap down here from around 280 to around 270. So we can look eventually for that gap to be filled, which I'm more than confident that it will be filled to the upside, that is. And right now the stock price is around 230, 234, I think 231 actually. So that is significantly lower, like I was saying, than it has been over the past year or two. And we saw them drop down all the way to around 216. I've definitely been buying in this 216 to 235 range. I think that's a fantastic stock price for this company. I think that over the long term, you can see they don't have a lot of volume down here, so they probably won't stick around down here for too long, unless there's some other outside factors with the global politics or economy that kind of suppresses their stock price for a while. But I think even if we see this stock price linger around here for months and months and months, that's really not that big of a deal, as it will just give us more and more of a buying opportunity to buy up the stock. So over the long term, I'm really excited about this company. I actually want to show my position in my portfolio. Like I said, this is one of the largest companies I do own. Right now, it's around 7% of my dividend portfolio, with a value of around $162. I only own around 0.7 shares. I'd love to get that up to a whole share sometime soon. But I've been slowly buying some more shares over the past few weeks and few months. I definitely bought some in the month of February, if you watch my February portfolio update video, and I have been buying some in the month of March as well. So you will see that at the end of the month in my March portfolio update video. So let me know if you guys do invest in air products, chemicals. The basic materials sector is really one that I would say is not as popular for people to invest in, and that's sort of the reason that I like investing in that sector, because it's not as popular. And I just think Air Products and Chemicals is a great company. I'd love to hear your thoughts in the comments below. Just want to thank you for sticking around to the end of the video, and I'll see you in the next one.